What's going on, traders? My name is Dave, and in today's episode, we're going to be taking a step back to the basics, going over the fundamentals and best practices of technical analysis headed into 2022. In this episode, I'm going to share with you my favorite indicators that led me to great success in 2021, how I set them up, and how I utilize them within charting and technical analysis. We're also going to be discussing trends and how to establish trends in the market using support and resistance lines, and also how I confirm every single trade using this one singular tool. But without further ado, let's roll into the intro and hop into some live charting, guys. And to the charts. All right, folks, we're back, we're live, and we are ready to go. So in this video, I'm going to be going over 3 technical setups, the indicators that I use, how to establish a trend, and what tool I use to confirm literally everything, guys. So our first example is going to come with Apple. Apple has been having a great year, and honestly, most of the market has had a phenomenal year. So the first thing that we're going to be going over is basic support and resistance lines. So what we're going to use here is our eyes. Yes, that's right, our eyes. As we can see, there is some resistance, and all resistance mean, guys, is a stoppage in upward pressure. What's stopping us is this area right here between 182 and 182.94. We don't have to necessarily draw a line here. We can draw a generalized area that is blocking us from moving on to the upside potential here. We can use this range right here for that. Now next, we do want to establish our lower trading range. And our lower trading range is going to come from support that we have within our chart. Now, down here, we do have a stoppage, and also looks like it was earlier resistance right here around that 167.75 area. So we can go ahead and draw a horizontal line between this area. And this is going to be our current trading range. And now that we have established our trading range, the next thing we want to do is really focus on our indicators. So what we have on the chart here is 3 indicators that I use for every single thing that I trade in the market. A is going to be volume. Volume is literally huge in deciding trends. We also have the RSI and the MACD. So starting off first with the MACD. The MACD is the moving average convergence divergence, which stands for MACD, is a trend following momentum indicator that shows the relationship between 2 moving averages of a security's price. Traders use the MACD to identify when bullish or bearish momentum is high in order to identify entry and exit points for trades. MACD is used for technical traders in stocks, bonds, commodities, forex markets, and also cryptocurrencies. You name it, you can use the MACD. One of the biggest things I look for in the MACD is going to be first this crossover period between this orange and blue line. Now, as you can see here, and we'll zoom out a little bit so you all can see exactly what I'm talking about, the MACD last had a crossover right around this time frame between 10.6 and 10.13. On this crossover, this is very bullish because we have the crossover, which is a shift in momentum between the bears and the bulls. And as you can see, once this crosses over, the bulls start to take in control and start to have that bullish move up. Now, on the opposite side, when this orange line crosses over the blue line, we can see that the momentum has flipped and the bears are now in control. As you can see, we came up to our overhead resistance, MACD crossed over slightly after this, and the price traded down after that. So, crossover to the upside is a bullish thing, crossover to the downside is a bearish thing. Now, let alone the MACD is not really helpful, but once we throw this in with the RSI, looking at the volume, and basic technical setups, we can become very successful traders in today's market. Now, the next indicator that I use that we're going to discuss is the RSI. RSI has a very simple understanding behind it. Over this 70 area, that is what is considered to be overbought, meaning that you are buying too much of the security, where the underlying market has been factoring in too much buying pressure. Now, under 30 would be quite the opposite, where you have too much selling going on in the market. Now, typically, a stock is not very comfortable in this overbought territory, but neither it is in the oversold territory as well. Typically, The stock does like to find comfort around that 50 area, but my general rule of thumb is anything over 50 is very bullish, under 50 is bearish. And the volume indicator that I do have below, this is just taking the daily volume that comes in from the stock. This is either a buying pressure or selling pressure. And if there's more buying, you will see a green candle. And if there's more selling pressure, then you will see more selling candles. Now, moving back into the stock, of course, you do see that I have a few lines drawn up here. This is actually our moving averages. The way I typically set this up is I love the 5-day, 20-day, 50-day, 100-day, and 200-day moving averages all embedded into the stock chart. Now, these are lagging indicators, guys. And the higher time frame that you use, the more lagging these indicators will be. And specifically, what I like to use these moving averages for is going to be support and resistance, because a lot of these stocks like to respect moving averages lines, as we can see an example right here when we touched right on that 50-day moving average before moving north. Secondly, I do like to spot and look for these crossover events. As you can see right here, you have that 5-day moving average crossing over your 20-day moving average, which did lead into some bearish momentum. Now that we have reviewed what all of the indicators I use are, why I use them, and how I use them in technical analysis, let's jump into a couple of live examples and walk you through how I would chart using all of these indicators. So first, like I said before, guys, we do have some overhead resistance in this area right here. As you can see, Apple stock did have some upward momentum going in the past couple of weeks, but we were stopped at this area and unable to move forward. It looks like they do need to test out some more support and resistance lines, go over some supply and demand as well to meet those conditions and move the stock further. But before that, it is looking like it's going into a cooling off period, which is totally fine. But our goal here is to find where we should either potentially enter a play, or if we should sit on the sideline and wait for more selling to be over. Now, the other option is to go short on the play or to open some put positions, but that is an episode for another video. Now that we have established our upper trading range here, which does seem to have that blockage in price action, we can look and define lower trading ranges as well. So I personally really like to use the horizontal line where I have some touch points in the recent past. So what it looks like here is we do have some support right here around 167.81. Why is that? Well, it looks like we did have resistance here in the past before kind of breaking up into this top region here. But also, when we did have this move down recently on December 20th, it did act as support. So finding an area that does act as resistance and then support on the opposite side is a great indicator that that is a very good area to look for. So that is great right there. Now, of course, guys, moving and charting, you only get better the more that you do it. So charting just relevant information where the stock is right now is sometimes not the greatest thing to do. We always like to look at past historical evidence of where the stock trades, what it likes to fight against, what helps the stock move higher, how the volume looks, how the RSI looks, and what the MACD looks at that point of time, and compare that to how the stock is actually trading. And if it's very similar, that's very good odds. And just moving down in this chart, it looks like we also have some great resistance and support at this 149.96. So we can call it 150 just to make things simple. And just an FYI, I know a lot of people like to get exact to the decimal point, but in all honesty, to me, it doesn't really matter. I'm really looking for rough ranges where I do believe a stock is going to either bounce to or where we can see some overall resistance or support within the stock price. So now that we have established a few different areas where I do believe that Apple could end up in the next couple of days, of course, if we do move down to the downside, which I believe there's high probability there is, I'm going to go over what I look at and how I really confirm technical setups. So the big thing that I use is volume. My rule of thumb with volume here, guys, is if we see price rising with volume increasing to the upside, well, that's great. That's a great trend that you're catching onto right there. Now, if we see volume decreasing but price rising, that means that the push up to higher highs or just a higher push all in all is a weak push and buyers are exhausted. Now you can flip those two examples that I gave you to the seller side and get the same theory as well. If you have declining price with declining volume, it looks like the bears are in control, and that is a absolute trend to the downside. Now, if you see price decreasing with volume decreasing as well, it's not a strong push to the downside, and it shows that a reversal is incoming. That's really my simple thing that I use for volume trends, and it works very great. So we'll actually just look at a live example here. Using the volume down here, we can see, and of course it's not going to be perfect, but all in all, you do have this upward trend in buying pressure. Well, what did this lead to? A solid run to the upside, guys. Now, over here, we'll look at volume. Volume was all in all decreasing, but still moving to the downside. And so what does that mean? Well, as per the other example, that means that the push to the downside was overall pretty weak. That's when buyers stepped in and absolutely drove the stock to all-time highs with a very great push. Now, additionally, guys, where we're currently sitting at in Apple's price, it looks like we have been testing this oversold area, which is why we do have that overhead resistance here, and specifically why we have had this cool off in price for the past couple of weeks. Additionally, looking down here at the MACD, the big thing that I'm looking for is crossovers on, and of course, bullish momentum versus bearish momentum. As we can see, when this RSI was oversold, MACD did decide to start reversing to the downside and looking for that bearish crossover. Now, looking down here at the histograms, which are these red candlesticks right here at the bottom of my chart, we can see that the histograms have been increasing, which is a sign that there is more downside pressure to come. This made sense because RSI was high, volume was all in all decreasing, and we were at that overhead resistance that we were watching. Now, the biggest thing with TA is really to watch the price, analyze all of the indicators, and make predictions, but not have an overall sentiment towards the stock. Now, I always like to look at things at a very neutral level and always give myself a bullish and bearish case. So, of course, guys, as we know, Apple has been having that pullback. We went over the indicators. So I would personally believe that we do see this area here with the 167.81 coming in the near time future. It's because volume has been overall maintaining this same level on this decrease. RSI has kind of come down below that 50 range, and the MACD histograms are moving to the downside. Now that does look like a very bearish case, but we always want to keep this area in mind as well, playing that neutral stance in the market. And then additionally, the big thing that I absolutely love using are those moving averages. What we look for are those crossovers, but also support and resistance like we have discussed. So if we do fail at this support here, we do have our 50-day moving average right here. Now breaking below that, we absolutely come down and we start looking at our 100-day. Falling below that, we do come down and look at our 200-day. But the biggest thing with using moving averages is really understanding the stock. Because if we look back, we can see that this area right here, this 100-day moving average, has acted as great support and great entry points in the past. I mean, we can move all the way down and even see when we did touch that 200, it acted as great support to the upside. So using past historical movements and trends is a great way to become a successful technical analysis trader for 2022. Now, we're not going to just sit here and beat up Apple stock. We are going to move forward and look at some other examples. Specifically, I do want to jump over to the S&P 500 because one thing I urge you all to do is to track all of these major indices. This tells a great story, and we'll actually go ahead and just delete these drawings. But this does tell a great story for how the underlying securities such as Apple, Microsoft, Amazon, you name it, trade on a regular basis. This right here is a basket of 500 securities. So if we can understand the overall trend of the market, that will absolutely help us in understanding the trend of single securities and how we expect them to move. So similar to Apple, the S&P 500 does have this upper resistance level right here, and we can just use our rectangle tool here to just draw that out. So this is our overall resistance that we are battling for, and of course, moving past this would lead to all-time highs. Now, recently, the S&P 500 has been trading in a pretty solid consolidated zone. We can establish this right here. So we'll get our horizontal line and say that this area and sorry, I just want to get this great for you guys. Oh, it would help to hit the tool before you select it. But this generalized area has been an area of consolidation for the S&P 500, specifically because we have moved quite far away from that 200-day moving average and even arguably the 100-day moving average. So using our volume, using our RSI, and using the MACD, let's go over some predictions for the S&P 500. Well, what do we see here? Well, we do see increasing volume, but with overall selling pressure, meaning that this area of $479.98, well, it looks like the bulls are not ready to take control and push the stock price over this level. So what happens? The sellers step in, they drive the price down, and they look for liquidity zones within the underlying security. This is all done with simple supply and demand metrics. And this trend of the volume does tell us that we are on that downtrend. Using the RSI tool right here, we have broken beneath that 50 area, which does show us that we are starting to trade very bearishly for the S&P 500. And what's going on with the MACD? Well, we did have that crossover, and it does look like we are headed back down to the neutral area, which should lead to a bit more downside. Now, like I said in the last example with Apple, we do want to look at those moving averages and look at where we have been finding those areas of support. Well, looking back at it, this area here, this yellowish line, which is the 100-day moving average, looks like an area that the S&P 500 does tend to move to in those bearish case scenarios. We can see this back here in this range between just about 9/20, 2021 and 10/13, 10/12 of 2021 as well. Again, we saw this right before this dip here. We almost barely came down to that 100-day moving average, but here on this dip down, we perfectly touched off this area and started a bull case run up. So now that we have kind of traded under this blue line here, the 50-day moving average, it looks like, yeah, we may come back down to this area and test here. Now, even coming a little bit below this to our support here at 450 wouldn't be the worst case scenario, but specifically, I would like to see some type of consolidation before confirming our bullish case up, which we have seen in the past. Now, guys, it is super important to really watch these stocks and look at historical past movements and how it is played out, because this can really help you in a lot of cases. Now, just looking at this right now, it would be very difficult to see where we could find support at the S&P 500, besides using basic support and resistance lines. But once we do look back at some historical evidence of where we do see pullbacks to, it is absolutely clear that we love that 100-day moving average area. So that's why it's super important to really combine all of the indicators with these moving averages on top of basic fundamentals of technical analysis. And lastly, guys, since we already discussed Apple, we discussed a major industry, the S&P 500, I do want to show you that this all still applies with even cryptocurrency. So we're going to look at my favorite. We're actually going to jump over to Ethereum. We're going to delete everything that I have on the charts right now. Yes, confirm, delete. And go over the same thing that we've been discussing. So just like comparing Apple to the S&P 500, we also like to compare other cryptocurrencies because they do overall like to trade very closely with each other. Now, it's not the exact same movements, but they like to follow the same generalized trend. So let's jump into Ethereum. Well, as we can see here, that $4,871 area is our overhead resistance area. So we can actually draw this rectangle shape. And I do want to just get in a few different things. So we're just going to highlight this generalized area here. This looks to be like some heavy resistance, as we can see here, here, and here again. In all 3 times we were rejected, it does look like that is a great spot for overhead resistance. Now, looking down here for support, since we have kind of failed past earlier support areas and also have decided to trend even below our 200-day moving average on this 1-day chart, we can see that we do have some consolidation, which is a great area to draw our support and resistance lines. So we'll again use this horizontal line and look at this range right here. Looks like we do have some overhead resistance back in late May, early June of this year, but also confirmed it on support here in late September of 2021 after a small minor pullback. So now that we have failed all those moving averages, we can look at this area here. But the biggest thing here is we have to use those indicators, guys. The RSI is in that oversold territory. Like we said, that is when we do expect buyers to step in and drive that price back up closer to the neutral area, which is 50. And the MACD, if we zoom in a little bit, we can see that the MACD is on this bearish decline. But as of today, actually, this histogram is starting to line up perfectly with yesterday's, showing that we could see a reversal in price and this RSI start to move back up into this neutral area here. That would make a lot of sense, coordinating it with the RSI and coordinating it like we did say, because we are coming close to that support area down here. And similar to our overhead resistance, guys, we almost are never going to see things work 100% perfectly. So as we can see down here, we do have an area of support as well, where we did consolidate for a little bit, finding comfort before a decent size move up. So we can even say that this generalized area here is a decent support area to look at. And throughout all of this technical analysis, guys, we have been utilizing this 1-day chart, but all the same practices that I have informed you about in today's video can be applied to just about every single time frame. Now, there are different time frames for different trading strategies. I specifically do like to use more of the 1-day chart because it gives me a larger picture of where the overall stock is trading and trending. Now, looking sometimes at that 1 minute or 5 minute, you're really stuck down in the micro picture of where the stock is, which a lot of time is very irrelevant unless you're day trading or just scalping a stock. So that's why I do like to look out on those larger time scales, but also for more of like weekly plays or even bi-weekly, monthly plays, jumping over to the 1 hour chart is not a bad idea. I do personally like using the 1 hour and 30 minute. Those are more for shorter time frames. But when I am zooming out, I do like to use those 1 day and 4 hour charts, and because putting everything all together is how we're going to become better traders. We can't rely on just one time frame every single time. We have to zoom out, and we also have to zoom into those smaller time frames to make sure our trends are working in the macro and micro perspective. And of course, as promised, guys, I did want to show you my favorite tool for confirming all of my plays. So, looking at charts, looking at all the indicators, looking at the volume, the RSI, the MACD, it's all great. But of course, there are some external factors that we always have to keep in our mind. And specifically, we do know that options is a very large factor in how the security is going to move. So that's why I use Unusual Whales. This is a very user-friendly platform that helps me get an idea of where the large whales are putting their money, either on the long side or on the short side, specifically what prices are being targeted and what expirations or timeframes that these whales are looking at. It puts it all into a very user-friendly portal, and it just all looks great. It's easy to find data and information that I'm looking for in a scram. So just having one ticker up on the screen right now, of course, you guessed it, we're going to look at AMC real quick. As we can see, there are certain filters that you can set. I like to set that premium range over $100,000 in premium, what you're paying for the underlying contract, and your DTE range, your days till expiration. So this portal right here is the main portal that I would most likely have up if I am trading on a given day, seeing all the different orders come in, what they look like. But of course, guys, we can get into the nitty gritty here and go over daily levels. We can go over the historical data. We can go over the company profile, the analyst. There's a lot of different things that we can use. But more specifically, guys, I do like to use the number of calls and volume of calls just to see if it is more of a bullish or bearish push on the large scale size, and also using the breakdown by expirations and breakdown by strikes to see really what targets are out there in the micro and even macro perspective. Now, I will be coming out with a future video that dives a little bit more into the nitty-gritties of unusual whales and how to better utilize this platform. But for right now, all you need is the basics for a pretty good technical analysis strategy. All right, guys. Well, there you have it. This is what I use for a technical analysis and really the basics and fundamentals I want to share with you all today. I hope this is all useful information that you can move forward with and use and implement on a daily basis. Now, if you have any questions or want a deeper review on something, please feel free to message me in the comments section below or even DM me on Twitter. Happy to help and spread the information where I can. But that's all that I do have for today's video. Be sure to smash that like button, subscribe for more content, and tune in for the next one. Peace.